On December 22nd, 2025, spot gold shattered yet another all-time record. But here's the revelation that cuts through the noise. This breakout isn't random market euphoria or speculative mania. It's the mathematically inevitable climax of a rigid, four-stage pattern that has governed every major precious metals bull market during eras of systemic monetary stress and geopolitical fracture. A pattern as predictable as compound interest in reverse. Currency debasement fueling hard asset revaluation. Stage 1. The setup. Fiat confidence erodes through deficits and dovish policy. Stage 2. Expansion. Central bank and investor buying accelerates as safe haven demand compounds. Stage 3. Crisis. Geopolitical triggers. Ignite panic flows, rejecting restraint. Stage 4. The inevitable outcome. Parabolic peaks, followed by either cathartic reset or prolonged elevation in a new price regime. Look at the data coldly. Global debt now exceeds $320 trillion, over 350% of GDP. U.S. deficits run $2 trillion annually. The dollar index slumped 9-11% in 2025, its worst year in decades. Fed rate cuts resumed amid persistent inflation signals. Central banks led by China, Poland, Brazil added record tons, de-dollarizing reserves, all while wars rage and trade walls rise. This is no accident. Gold's 2025 surge to 477 mirrors prior peaks exactly when the pattern matures. 1980, $850 amid stagflation. 2011's $917 post-GFC QE infinity. The mechanism is fixed, chronological, universal. Stage 1, the setup. Fiat system strain under debt and inflation. Opportunity emerges for hard money as yields fall and uncertainty rises. Central banks begin quiet accumulation. Investors dip toes. Stage 2, expansion. Buying explodes, ETFs, bars, coins. Prices compound as supply can't match demand. Geopolitical sparks add premium, but core driver is monetary debasement. Stage 3, crisis. Triggers erupt. Wars, sanctions, policy shocks. Safe haven panic rejects alternatives. Flows become unstoppable. Stage 4, inevitable outcome. Parabolic blow-off or sustained high plateau. Fiat reprices downward, hard assets upward until equilibrium. Rooted in human incentives. When trust in paper erodes, tangible scarcity wins. No ideology escapes it. Proof demands history. 3 detailed case studies, each tracing the exact stages. First, the 1970s stagflation bull market culminating in 1980 peak. Stage 1, setup. Nixon shock. August 1971 ends Bretton Woods. Gold convertibility, dollar devalues 10% immediately. Vietnam War deficits balloon, oil embargo looms, Fed loose policy, gold legalized for U.S. ownership 1974. After 40-year ban, price freed from 35 war dollars fix. Stage 2, expansion. 1973, Yom Kippur War, OPEC embargo, oil quadruples. Inflation surges double digits. Central banks sell initially, but investors pile in. Gold rises from $35, 1971, to $200, 1978, then accelerates. Stage 3, crisis. 1979, Iranian Revolution, Soviet-Afghanistan invasion. Second oil shock, prices triple again. Fed chair. Volcker appointed, but initial hikes fail to curb. Panic buying, lines at dealers. Stage 4, outcome. January 21st, 1980. Peak, $850 intraday, 329% from 1971. Inflation adjusted, $3,300 today. Then Volcker slams rates to 20%. Recession crushes inflation. Gold crashes 65% by 1982, enters 20-year bear. Verified, pattern exact. Second, post-global financial crisis rally, 2011. Stage 1, setup. 2008, Lehman collapse. Fed balance sheet explodes from 900B to 4.0 T via QE. Zero rates. Dollar weakens. Deficits soar post-stimulus. Stage 2, expansion. Central banks turn net buyers, first time since 1980s. China discloses massive purchases. ETFs like GLD launch inflows. Gold from $700, 2008 low, to $1 at $300, 2010. Stage 3, crisis. Eurozone debt crisis. 2010-11, US downgrade 2011. Arab Spring, Libya. QE2, Operation Twist. Safe haven frenzy. Stage 4, outcome. September 2011, peak, 169.17, 163% from 2008 trough. Then Fed tapers hints, rates rise eventually. Gold corrects 45% by 2015, undeniable match. Third, Great Depression revaluation, 1930s. Stage 1, setup. 1929, crash, deflation spiral. Banks fail, dollar overvalued under gold standard. Hoover policies fail. Stage 2, expansion. Roosevelt elected 1932, bank holiday. Executive Order 6102. April 1933 bans private gold, forces surrender at $20, 6770. Stage 3, crisis, Gold Reserve Act. January 1934 revalues official price to 35, 69% devaluation. Citizens compensated old price, but new market reflects debasement. Stage 4, outcome, instant 69% jump. Gold stocks soar, home stake mining pour 400%. Stabilizes economy via reflation. Sets stage for post-WW2 Bretton Woods. Check. Pattern holds even under direct intervention. These prove universality. Different eras, triggers, yet identical stages. Now systematic application to 2025 precious metals, supernova. Stage 1, setup, verified. Post-COVID deficits explode, US debt 35T+. Fed hikes 2022-23 crush inflation temporarily, but pivot 2024-25 amid slowdown. Rate cuts resume, dollar slumps 9-11%. Central banks net buyers since 2022, record streak. ETFs bleed, then refill 2024-25. Gold breaches $3,000 early 2025. Check. Stage 2, expansion. Undeniable. Demand surges, 980 tons, investor central bank, Q3 alone. China leads. Poland, Brazil, Uzbekistan. Add. ETF inflows reverse. Physical bars, Dot-Chios coins boom, India despite prices. Gold from $2,600 start 2027 to $4,000 October breach. Verified. Stage 3, crisis. Confirmed. Venezuela tanker seizures, Ukraine barrages, Middle East flares, Trump policies, tariffs, dovish Fed hints, dollar crumbles, panic flows. December 22nd, spot 44 rhymes to 7 bow. Intraday, silver 69.44. Undeniable. Stage 4 approaches inexorably, either 5,000 plus its parabola, Goldman forecasts $4,900 2026, or sustained 4,000 plus floor in debased regime. Cold mathematical confirmation, 2025 identical to priors. Final warning, pattern absolute. Dismissals. Feudal. This time different because Fed control, yet Volcker needed 20% rates post-1980. Crypto replaces gold. Bitcoin crashes while gold peaks. Globalization prevents crisis. Trade wars prove opposite. Strong economy supports fiat deficits. Wars erode. No. Machine grinds. Debasement demands revaluation. Practical insight. We're late stage 3. Stage 4 imminent. Position and physical. Gold, silver ratios favor silver outperformance short term 138% YTD versus gold 69%. Diversify beyond dollar assets, strained by debt-touch geopolitics. Central banks hoard for reason. Follow. Understand. Peaks precede resets, but long-term hard money preserves. To endure stage 4, whether blow-off or new plateau, decode architects next. Who orchestrates demand, hidden flows, survival hedges. If this structural truth awakens you, subscribe urgently. Alerts essential. Next, silent forces behind 2025 surge. Precise positioning for inevitable outcome. Machine accelerates. See clearly, or lose purchasing power in gears. And the machine doesn't pause. It surges forward with relentless force. As we plunge deeper into Stage 4's dawn on this December 23rd, 2025, spot gold has not only held its ground, but pushed boundaries further, trading around $4,179, with intraday highs brushing $4,497, while silver consolidates near $69 after its record $69.44 peak yesterday. This isn't consolidation. This is the parabolic acceleration the pattern demands when crisis triggers align perfectly. Central banks continued their insatiable accumulation throughout 2025, on track for another 1,000 plus tons, despite sky-high prices. Emerging markets leading the charge as de-dollarization accelerates. ETF inflows shattered records in Q3 alone, with $26 billion flooding in, reversing years of outflows and signaling institutional awakening. The dollar index limped through its worst year in decades, down 9-11% as deficits balloon and rate cut bets solidify. Deeper into the mechanics. Mining supply constraints bite harder. Annual gold production hovers stagnant around 3,600, 3,700 tons, while demand explodes. Jewelry steady in Asia, industrial use rising with electronics and green tech, but above-ground stocks recirculate slower amid hoarding. Recycling dipped as holders refused to sell into strength. The supply-demand deficit widened to levels unseen since the 2011 peak, forcing prices higher to ration scarcity. Extend the historical lens even further to illuminate today's frenzy. Consider the Roman denarius, debasement from Nero onward. Stage 1, fiscal strains from empire overextension. Stage 2, silver content cut gradually from 100% to under 50% by 270 AD. Stage 3, inflation spirals, Gresham's law drives good money out. Stage 4, economic collapse, barter resurgence. Gold's relative value soared as trust evaporated. Or the Weimar hyperinflation, 1921-1923. Stage 1, war reparations, crush marks. Stage 2, printing explodes to pay debts. Stage 3, prices double daily, savings wiped. Stage 4, currency reset to Rentenmark, but gold holdings preserved wealth for the few who held. These ancient parallels underscore the pattern's timelessness. Fiat overissuance always births hard asset revaluation. In 2025's application, Stage 4 manifests vividly. Geopolitical catalysts compound. U.S.-Venezuelan tanker seizures escalate energy risks. Russian Kiev barrages intensify European uncertainty. Middle East flares persist. Trump's tariff threats and fiscal giveaways, potential $2,000 stimulus checks, inject fresh debasement fears. Fed signals more cuts amid softening data. Dollar slumps to multi-year lows against majors. The outcome bifurcates. Parabolic blow-off toward Goldman Sachs' $4,900 2026 target if tensions spike, or sustained $4,400 plateau as new normal in fractured regime. Silver's 138% YTD outperformance hints at industrial catch-up. Platinum's 17-year highs reflect supply squeezes. Dismissals shatter completely. The Fed can engineer soft landing, yet deficits 2T plus annually erode credibility. Crypto supplants gold. Bitcoin volatility exposes while gold grinds higher. Tariffs strengthen dollar. Initial boost fades into inflation pass-through. Peace dividends emerge. Proxy wars drain treasuries. No escape. The pattern consumes optimism, reprices reality. Insight sharpens for navigation. Stage 4 favors allocators over speculators. Physical delivery premiums rise. Coins, bars command $5 10% over spot in tight markets. Miners leverage explosively. Free cash flows soar at $4,400 margins. Juniors with ounces in ground re-rate violently. Ratio trades, silver gold at 65:1, screams undervaluation, silver's deficit deeper. Hedge fiat erosion. Allocate 10 to 20% portfolio to hard money stack. Understand mining equities as amplified beta. Costs fixed, revenues explode. The machine crowns its cycle. Stage 4 redefines wealth preservation in debased era. To master the parabola, who captures upside, who survives correction, ultimate reset mechanics, unveil the flows next. Institutional positioning, mining renaissance, post-peak playbook. If this unmasked truth ignites urgency, subscribe without delay. Alerts mandatory. Next, the silent reallocation revolution fueling $5,000 gold and irrefutable positions for inevitable regime. The pattern peaks. Align or evaporate with fiat illusions, yet the pattern's apex sharpens with each passing hour, unyielding in its ascent. On this very day, December 23rd, 2025, spot gold has not relented from its historic thrust, oscillating around 4,180 per ounce. Delve into the undercurrents propelling this phase. Central bank hoarding reached fever pitch in 2025, with net purchases eclipsing 1,000 tons for the third consecutive year. China alone snapping up over 300 tons, Poland adding 150, and even traditional sellers like the IMF turning neutral. These aren't speculative bets. They're strategic de-dollarization maneuvers, as reserves shift from U.S. treasuries yielding paltry real returns amid 3 and 4% inflation to immutable gold. ETF dynamics amplify. GLD and IAU saw $30 billion in inflows since January, reversing 2024's outflows as retail and institutional money floods in. Physical demand from India and China, despite record premiums, pushed bar and coin sales to 1,200 tons, up 15% year over year. Supply-side fractures deepened the deficit. Global mine output stagnated at 3,650 tons, hampered by labor strikes in South Africa, environmental shutdowns in Peru, and escalating energy costs from European gas shortages. All-in sustaining costs, AISC for producers, climbed to $1,400 OZ, squeezing margins until prices broke free. Now, at 4,480, majors like Newmont and Barrick generate free cash flows north of $2 billion quarterly, fueling a mining stock renaissance with the GDX ETF up 120% YTD. To illuminate Stage 4's contours, extend historical scrutiny to analogous climaxes. Recall the California gold rush of 1849, not a monetary bull, but a supply shock mirroring today's constraints. Stage 1, Mexican cession sparks migration. Stage 2, extraction booms to 100 tons annually. Stage 3, inflation ravages California prices. Stage 4, output peaks. 1852, then declines. Economy resets on hard money influx, birthing San Francisco's financial hub. Or the 1980s silver squeeze by the Hunt brothers. Stage 1, 1970s inflation setup. Stage 2, brothers accumulate 200 million ounces. Stage 3, COMEX crisis. January 1980, prices to $50. Stage 4, regulatory crackdown, crash to $10, but silver's role as industrial hedge endures, presaging today's dual demand pull. These vignettes affirm Stage 4 resolves imbalances through revaluation or intervention, but hard assets persist as victors. In 2025's unfolding, Stage 4 bifurcates paths. Optimistic reset. Fed engineers stability via targeted QE, capping the parabola at $5,000 before mild correction. Dystopian fracture. Escalating conflicts. U.S. Venezuela tanker standoffs morph into blockades. Russian-Ukrainian peace talks collapse anew. Iran-Netanyahu saber-rattling ignites. Triggers safe haven tsunami, propelling gold to 6,000 pluses in hyper-debasement scenario. Dollar index at 88, its lowest since 2011, accelerates the shift. Bitcoin, despite 200% YTD, craters in volatility bouts while gold grinds inexorably. Precious metals interplays intensify. Silver's industrial demand from solar, up 20% globally, and EVs outpaces gold's pure monetary allure, narrowing the gold-silver ratio from 80.1 to 65.1. Historic undervaluation screaming for mean reversion to 50.1 or lower. Platinum's fuel cell boom and hydrogen economy adds premium. Palladium's catalytic converter role strains under auto slowdowns, but rebounds on emissions regs. Dismiss every counter-narrative with ironclad logic. Overbought conditions signal top. Yet RSI at 75 mirrors 2011's sustained overbought before peak. Mining supply ramps, but lead times 10 plus years, discoveries at 50-year lows. Central banks taper. Purchases accelerate amid BRICS gold-backed ambitions. Peace resolves tensions. Proxy wars embed. Tariffs endure. Fiat innovation like CBDCs saves. They digitize debasement, amplifying flight to tangibles. The pattern mocks such delusions. It thrives on structural flaws, infinite money chasing finite scarcity. Practical wisdom crystallizes. Navigate Stage 4 with precision. Allocate dynamically. Physical gold for core hold. 1O's Eagles at 5% premium. Silver for beta. Rounds toss bars yielding 10-15% over spot and squeezes. Miners as leverage plays. Seniors like Agnico Eagle for stability. Juniors like Osisko for exploration upside. Ratio hedges. Long silver, short gold via futures if ratio 60.1. Diversify geographically, vaults in Singapore, Switzerland to mitigate custody risks. Understand corrections within the cycle. 20-30% pullbacks post-peak, as in 1980, 65%, or 2011, 45%, offer reload opportunities. Monitor sentiment. CFTC commitments of traders show spec longs at extremes, signal short-term caution, long-term conviction. The machine forges a new equilibrium. Stage 4 crowns precious metals as the antidote to fiat folly, reshaping portfolios and powers. To harness the peak, who dominates flows, what catalyzes the blow-off, enduring strategies post-reset, probe the veiled dynamics, sovereign reallocations, industrial choke points, the gold-dollar decoupling blueprint. If this unveiled imperative compels action, subscribe forthwith. Enable notifications. Forthcoming. The clandestine central bank pact accelerating $5,000 and unassailable fortifications for the regime's advent. The pattern consummates, embrace, or dissolve in the debasement deluge, and the ascent refuses to yield, forging ahead into uncharted territory with merciless precision. This is Stage 4 in full manifestation. The inevitable outcome where scarcity collides with insatiable structural demand, birthing parabolic revaluation that redefines wealth hierarchies. Central banks, undeterred by stratospheric prices, remain on pace for over 1,000 tons of net purchases in 2025, the fourth consecutive year of such magnitude, led by emerging powerhouses like Poland, China, and Brazil, who view gold not as speculation, but as the ultimate neutral reserve in a fracturing dollar-centric world. ETF inflows have already shattered records, with Q3 alone absorbing $26 billion as Western institutions finally awaken, pushing global holdings toward the 2020 pandemic peak of 3,129 tons. Supply constraints tighten the noose. Annual mine production lingers stagnant around 3,650, 3,700 tons, with all-in sustaining costs hovering near dollars. Extend the pattern's echoes to lesser-known but equally instructive cycles. The Spanish silver influx of the 16th century. Stage 1. New World discoveries flood Europe. Stage 2. Prices rise modestly as coinage expands. Stage 3. Inflation ravages Spain's economy despite treasure fleets. Stage 4. Empire bankruptcy, wealth transfer to creditors. Hard money's value endures while fiat equivalents debase. or the Confederate dollar during the U.S. Civil War. Stage 1, secession strains finances. Stage 2, printing presses run unchecked. Stage 3, hyperinflation spirals, goods priced in gold. Stage 4, currency collapse. Gold preserves purchasing power for those who held. These reinforce the mechanism. When monetary expansion outpaces tangible backing, precious metals assert dominance. In 2025's crescendo, Stage 4 bifurcates dramatically. Bullish resolution, sustained elevation above $4,500 as BRICS nations accelerate gold-backed trade settlements, anchoring a multipolar reserve shift. Bearish catalyst, forced liquidation if central banks pause amid stabilization illusions. Yet history indicts such pauses as temporary, with rebounds fiercer. Geopolitical accelerants abound. U.S. pursuit of Venezuelan tankers escalates energy premia. Ukrainian strikes on Russian assets remind of proxy perils. Trump's tariff barrages and proposed $2,000 stimulus injections signal fresh debasement waves. The dollar index, battered to multi-decade lows, seeds ground as real yields turn negative again. Silver's outperformance intensifies the narrative. Solar panel installations projected to consume record tons in 2026. EVs multiplying conductor demand, data centers exploding with AI power needs, all while primary silver mines yield less as byproduct of base metals. Dismiss the final refugees of denial. Peak gold arrived, supply surges imminent. Yet discoveries at 50-year lows, projects delayed indefinitely. Substitution reduces industrial need. Alternatives inferior, costs prohibitive. Rate hikes crush demand, yet cuts resume amid slowdown fears. Digital gold, like Bitcoin, supplants. Crypto convulses while physical endures. Governments ban or confiscate. Executive Order 6102 echoes, but global dispersion frustrates repetition. The pattern devours exceptions. It operates on immutable laws. Trust erosion demands tangible recompense. Actionable clarity emerges for those attuned. Fortify in Stage 4's volatility. Core physical allocation, vaulted coins and bars, for intergenerational preservation. Leveraged miners, for asymmetric upside. Seniors with low AISC generate torrents of cash. Juniors with discoveries re-rate exponentially. Silver as the high beta play. Ratio at 65.1 undervalues its dual monetary industrial role. Target reversion to 50.1 yields explosive gains. Monitor exhaustion signals. Speculator longs at extremes. Sentiment euphoric. Prepare for 20 to 40% corrections as breathers, not reversals. Reload on dips as post-1980 and post-2011 bears offer generational entries. The machine crowns its victors. Stage 4 elevates precious metals to apex predators in the portfolio food chain, punishing fiat fidelity while rewarding scarcity discernment. To command the climax, who orchestrates terminal flows, what ignites the ultimate blow-off, unbreakable defenses against the inevitable correction. Delve into the concealed conduits, sovereign vault reallocations, mining capital renaissance, the post-parabola wealth transfer blueprint. If this prophetic dissection pierces complacency, subscribe with resolve. Notifications imperative, imminent, the veiled consortium propelling $5,000 gold and fortified arsenals for the regime's inexorable dawn. The pattern consummates its judgment. Align with the immutable or perish in the fiat inferno. And the machine crowns its cycle with unassailable momentum, etching new milestones into the annals of monetary history. As trading unfolds on this December 23, 2025, spot gold has pierced yet another barrier. This is Stage 4 at its zenith. The inevitable outcome where finite scarcity confronts exponential fiat erosion and structural hoarding, propelling prices into regimes once deemed impossible. Central banks, impervious to valuation vertigo, remain locked in accumulation mode, on trajectory for over 1,000 tons in 2025, despite the fourth straight year of such magnitude, with emerging giants like Poland, China, Kazakhstan, and Brazil orchestrating the de-dollarization symphony. ETF inflows continue their relentless march, with Q3 alone absorbing a record $26 billion as Western portfolios finally capitulate, pushing global holdings toward the 2020 pandemic summit of 3,929 tons. Supply dynamics forge the ultimate vice. Mine production stagnates around 3,650, 3,700 tons annually, shackled by depleting grades, decade-long development lags, and escalating costs, leaving all-in sustaining margins bloated at current elevations, yet incapable of spurring meaningful new output. Recycling falters as sovereign and private holders clutch tighter, exacerbating deficits that echo the tightest squeezes of prior bulls. Extend the pattern's resonance to overlooked but profoundly analogous episodes. The Byzantine solidus endurance through centuries of imperial strain. Stage 1, fiscal overreach from endless wars. Stage 2, gradual debasement under later emperors. Stage 3, Inflation erodes confidence, gold hoarded privately. Stage 4, currency collapse under hyper-debasement, yet solidus remnants preserve elite wealth. Or the French assignats of the Revolution, 1789-1796. Stage 1, revolutionary deficits soar. Stage 2, paper issuance explodes. Stage 3, prices skyrocket, assignats repudiated. Stage 4, return to metallic standard, gold and silver reclaim primacy. These arcane cycles affirm the mechanism's eternity. Paper proliferation invariably anoints hard money supreme. In 2025's apotheosis, Stage 4 ramifies exponentially. Bullish trajectory. Entrenched above $4,500 as BRICS gold-backed mechanisms gain traction, forging a bipolar reserve architecture. Cataclysmic variant. Venezuelan escalations morph into broader energy crises. Ukrainian-Russian entrenchment drains fiscal coffers. Trump's fiscal largesse, $2,000 stimulus whispers, ignites fresh inflation fears, catapulting gold toward 5,000 plus in a debasement deluge. Intermetal dynamics electrify. Silver's solar surge, record panel demand amid green mandates, coupled with EV conductor explosion, tightens its deficit deeper than gold's, propelling ratio compression from 65.1 toward 50.1, historic norms. Platinum's hydrogen pivot adds scarcity premium. Palladium's Russian supply vulnerabilities sustain bids. Shatter the lingering illusions conclusively. Valuation extremes preclude further gains. Yet 1980 peaked at inflation-adjusted 300 pluses equivalents. Supply response imminent. Discoveries at generational lows. Projects mired in permitting purgatory. Central bank satiation. Purchases accelerate. Targets elevated like Poland's 30% reserve ambition. Substitution quells demand. Industrial necessities immutable. Policy normalization crushes. Dovish pivots dominate amid slowdown signals. The pattern annihilates anomalies. It enforces scarcity's tyranny over infinite creation. Discernment yields dominion in Stage 4's tempest. Tactical imperatives anchor in physical sovereignty. Allocated vaults beyond jurisdictional grasp. Amplify via miners. Seniors harvesting 2,000 Twizzlers margins per ounce. Juniors detonating on resource delineations. Silver for convex volatility. Industrial deficits promise outsized legs. Ratio arbitrage. Accumulate silver against gold, overbought signals. Vigilance on euphoria markers. Speculator positioning at extremes. Media saturation. Harbingers of corrective purges. 30-50% drawdowns that cleanse excesses before resumption. As post-1980 and post-2011 testified. The machine anoints its stewards. Stage 4 transmutes precious metals into the ultimate arbiter of enduring value, vaporizing fiat pretensions while exalting tangible verity. To seize the consummation, who commandeers the terminal surge, what precipitates the apogee, inviolable bastions against post-peak turbulence, unravel the esoteric currents, clandestine sovereign pacts, supply choke point detonations, the irrevocable wealth migration schema. If this inexorable epiphany demands allegiance, subscribe resolutely. Notifications non-negotiable. Pending, the obscured cabal engineering 5,000 plus, and impregnable ramparts for the paradigm's irrevocable coronation. The pattern adjudicates finally, harmonize with eternity or dissipate amid the monetary maelstrom.